Hey, what's going on? Welcome to the Real Estate Investing Mastery Podcast. On today's episode, we've got Dave Denniston on. We're going to be talking about all things vacant land flipping. David has actually been an entrepreneur, self-employed business owner for longer than I have. I've been self-employed for 16 years now. I think David said 17 years. Is that right, David?
Yeah, you
All right.
got it.
So maybe we can talk about the trials and the success stories and the pain of being self-employed, right? Because there are some challenges. It's some pretty cool to have the freedom and the flexibility to be able to work when you want, where you want. I've always joked around that the coffee's so much better at home than it was at work where I used to work, right? The bathrooms are cleaner and there is no commute. So it's awesome. But sometimes, man, I find myself, maybe David, you're the same way, right? You just find yourself, I kind of miss being with people. Are you kind of that way, or do you like not being with people?
Well, in my case, I do have an office that we run. So small office, not a lot of us here. So there's a total of four of us, a good chunk of the time. My wife, my executive assistant, Kara, and then kind of my right hand guy, Cameron. I do have an office with people, so I don't do the 10-second
Okay,
commute of roll out of my bed to the bathroom, but I'm
that's
only
good.
10 minutes away from home.
That's
So
good.
it's still pretty sweet.
I used to have an office, and I couldn't handle that either. So who knows? Whatever. We're all different, different strokes, different folks.
Right.
Okay, so I heard you on a podcast with Seth Williams. I think you recorded this 5, 6 months ago. Do you remember? Is that right?
Something like that. I think it was like January. Yeah, yeah. So like 6 months
Okay.
ago.
Real good podcast. And you talked about on there a little bit your journey. And I want to ask you these same questions here because I think my audience will find this really interesting. Your journey in from doing a bunch of land deals, how you quit your job, to maybe now you're doing some lending. Is that kind of the main focus of your business right now, would you say?
I started out in 2002 being a financial planning intern for a gal, then did door knocking with Edward Jones to try and get clients and got licensed in financial planning and stuff like that. And then I got burned out after a year of knocking on 2,000 different doors,
It's
multiple times in
crazy.
some cases to try and get clients. Because I was
Crazy.
fresh out of college, they told me that's the formula, let's do it. And so that was probably my first experience where someone says do this formula and it was like, all right, I'm going to try it and see what happens, and it didn't work for me in particular, but it led me to being an employee for somebody else. And then August 1st 2008 made the dive of acquiring another financial planning practice, which led me here to Minnesota. So I moved from Seattle all the way to Minnesota in 2008. Worst possible time, August 1st 2008, but we did it, we survived. And
Why
I've
is
been
that?
doing.
Why was that the worst time? Oh, the housing market.
Yeah, 1 month later, AIG, Lehman Brothers, Washington
Oh,
Mutual, all going bankrupt,
yeah.
financial markets in crisis.
But
And
did you
that,
sell your house in Seattle at the peak of the market, it sounds like? Or was
not
it
quite.
afterwards?
Not
Okay.
quite. So we had no debt before this acquisition. And then I levered up majorly to make it happen. It was literally a $1 million down payment with a $3 million purchase price. So really took a lot of risk at what ended up being the wrong time. And that's why
Ah,
for me, that experience really crystallized for me. I never wanted to be solo dependent on one
mm,
income stream ever
yeah,
again.
yeah.
So I still do financial planning today, and I have the land business still today, where last year I think we bought and sold something like 250 properties or something like that. And I have now doing some hard money lending, and then I do this Land Unconference thing for land investors to mastermind, get together, have high level discussions with experienced operators. So my
Yeah,
hands
so
in a lot
let's
of
talk about
different
that real
pots.
quick in case somebody bails and doesn't finish this podcast. You're doing a conference coming up here in a couple months in August, the end of August. Is that right?
Beginning of August, the 7th, 8th, 9th.
Yes. Yes. August 7th, 8th, and 9th. And I'm going to it. I heard you on the podcast with Seth, and I thought that sounds really interesting. I saw Seth post some stuff about it. And I don't remember the last time I've gone to a real estate conference as an attendee, not as a speaker or presenter or whatever. So I thought this would be cool just to kind of kick back and relax and learn some cool things, network with some people. One of the reasons I'm looking forward to going is to learning about how to lend more on deals. And that's one of the things you were talking about with Seth. And I want to ask you some questions about that. So let's go back into your history a little bit then, where you kind of left off. What got you interested in? Oh, and sorry. To get more information about that conference, where do they go, David?
Yeah, yeah. No, thank you, Joe. Appreciate that. Landunconference.com, because it's not a traditional conference, it's an
Yeah,
unconference. So landunconference.com to go check that out.
cool.
A-
And this is the third
And
one you've done.
this is Yeah, I've been doing mastermind events for since about 2019. I've done them for now 6 years, but I made it a larger scale back a few iterations ago, back
Yeah.
in 2022 or 2023, I guess was the kind of the first bigger unconference. That wasn't just 10 of us, but we did 50
Yeah.
of us and then 60 of us. And that's about what we got this year. We got about 60 experienced land investors. It's gonna be a
Yeah,
blast.
and so it's not for beginners, right? You
Hmm.
do require that they have done deals before, and there's an
Yep.
application process to
Yep.
go there to sign up. So we want people there that are experienced that are already kind of doing deals, right?
Exactly. Which, hey, if you're just getting going, we love it. And I would encourage people to apply if you might be interested in the future. It wouldn't be a good thing for you now, but if you want to stay involved, hear of different events and stuff that we do in the future, definitely go ahead and apply because we'd love to stay in touch and help people out. And maybe when you are ready, you can pull the trigger. But yes, we're looking for ideally people with $100,000 of revenue or more, which in some cases for some folks, that's just two deals. That's not a
Yeah.
lot relatively in the big scheme of things. But
Okay, good.
yep.
So landunconference.com. Talk about how you discovered land. What about land interested you, and what year was that?
Yeah, so that was 2017 actually. So 8 years ago, I had been on this journey that, as I said, hey, I didn't want to be solo dependent on one thing ever, right? So I was doing financial planning. My wife and I had our youngest daughter super duper duper prematurely in 2012. She was less than a pound. She was 12.4 ounces when our little miracle girl came into this world. And so I really wanted to get back to
Wow.
doctors. So I started a podcast because I was thinking, oh, this could be a great way to give back to the doctor community, and maybe I'll get more financial planning clients out of it, have another stream of revenue with some books and stuff like that. So I did that through 2023, that podcast. So I did it for about 10 years, had a great time, which exposed me to a lot of different things. So I tried Amazon FBA, I tried a few other things. Through Empire Builders, I bought a mobile gaming kit business with a cousin to see what that was like. And then I got into land. And of all those things, land is the thing that stuck, which it was so exciting, especially early on in 2017, back in the good old days, as some people might say now today. Obviously,
Maybe. I think we're still in the good old days.
yeah, it's different, but there's still plenty of opportunity for people getting in. And I think for great operators, there's always room for someone to come in and disrupt and do more things and have a great business. So
Okay. Do you mind if I ask who you learned land from?
yeah, so I learned through Mark Podolsky, Land
Yeah,
Geek. I
good program.
did initially, a lot of the cheaper properties. What I've loved about my land journey is you think about, oh, it's just land. There's not that much to it, and discovered just how deep we can do so many different kinds of things, which for me has just kept me intellectually interested and engaged in it. So I've done everything from sending out letters to hiring cold callers to tax lien investing and foreclosing on properties to participating in tax deed auctions and going at auctions and raising my hand and bidding and buying properties that way to minor splits. Just there's so many different ways you can chop this thing up. It's
Yeah.
been a blast. Certainly had its down moments, make no mistake about it, but overall I feel very lucky and blessed to literally
So
have now a business that's probably worth 3 or 4 million bucks, if you add up all the assets and the tax liens and all
oh
that
my
stuff
gosh, that's
together.
amazing. So like you said, the good old days back in 2017 or whatever, right? But you still did 250 properties last year or in the
Yeah.
last 12 months.
So what I've been doing with my business, I got to the point, Joe, where I had 500 notes paying me, which is amazing cash flow. But anyone that's been in this business for a while will tell you it is a management headache. It's a bookkeeping headache dealing with all of those notes. And I'm so
Yeah.
grateful for what we've been able to build. But I started looking at my staff and the amount of staff it took to like say, hey, if I wanted to double this, if I want to go from at the time I think I had close to $2 million in revenue for the business, I want to go to 4 million, 6 million, 8 million, 10 million in revenue. To do it on the cheaper stuff like I had been doing was just gonna be such a huge amount of staff needed, which God bless people who do that kind of thing. But I decided that I had taken enough brain damage that I want to maintain my note portfolio, but I really wanted to get more into some of the bigger cash sales. So I'm a little bit late to the game in terms of what some people were doing back in 2020 and 2019 and 2018 with what I call medium sized deals and subdivides and all those kind of cool things that this last couple of years, we've gotten deeper and deeper in, and we had about 3 million, a little over $3 million in revenue in 2024, and hopefully, we can hit $4 million in rev this year as we focus on not totally changing the business. I still love having the diversification of all of these payments every day coming into my bank account, but I the early payoffs and the defaults and late payments and all that kind of stuff that comes around with it, which are very good problems to have at the end of the day. But there is an expense and a cost, both mentally, physically, financially, to running that kind of business in bulk.
So at that time, how many employees did you have? What kind
I
of
got up
staff
to
did you have?
25. I got up
25
to
virtual
25.
assistants?
Hmm.
Okay. And doing about 2 million a year with 20 to 25 virtual assistants. And they were doing what? Marketing your properties for you, like putting them back on land.com or Facebook or the MLS or whatever, right?
Yeah, yeah. Which not all those people were full time.
Okay, yeah.
Probably 15 of them were part time people. So
Okay.
we're talking about 2-3 years ago now. So at the time, I had people do a lot of access scrubbing, which now today there's some great AI tools that and data providers that will do things for you that help you eliminate some of the properties we used to have VAs manually scrub. Right. So it was
Oh, I see.
hours and hours and hours, but it was worth the cost when you looked at, hey, we don't want to be mailing people that have 100% of their property in wetlands or doesn't have physical
Yeah.
access or legal access or some of those kinds of things. A lot of money that was wasted on our marketing in a lot of cases. That in some cases, it ended up working out, but most of the time it didn't. That was probably
How
6 or 7 were access scrubbers of just those VAs. And then we had,
6 or 7 just accessing, like looking at data before you mail them. Is it floodplain, road access, things like that?
which
Wow.
today we have none. We have nobody doing that because it's not necessary with some of the tools out there now
Well,
today.
let's talk about that real quick. I'm loving the land portal. Is that one of the tools that you use?
Yep, exactly. Yeah, so
Yeah.
Land Insights has a program as well too, and Land Portal are the main two. And I know some friends that are software people that have developed their own thing internally, to write the code and do that kind of thing. I think
Which is which is crazy. Now, I'm assuming in your direct mail for marketing, 'cause I'm going to ask you more about this later. Are you doing blind offers?
Yeah. So over the last couple of years, Joe, we've just really been experimenting a lot, just trying to say, hey, as we're moving up channel, what do we need to do? Traditionally, coming from the land geek world, they really focused a lot on blind offers. It was like a 1 page blind offer letter. And so we started experimenting with 2 page blind offers versus 1 page blind offer. And still today, we're constantly experimenting. Every month, we're trying something different. For example, in the month of July, we're going to be trying to try yellow envelopes versus white envelopes just to see, can we get a better ROI with yellow envelopes using the same font, same letter. The only difference is it's yellow rather than white. It costs us 10
Okay.
cents more to do
Now,
that.
have you tested just neutral letters? Like,
Yes.
hey, do you want to sell your land? Call. And why don't you like those? Because I prefer those. But tell me, I'm curious to see why you.
So when we've crunched the numbers for us, we did neutrals, ranged offers, and blind offers side by side tests. In 2024, it was pretty close, but blind offers were beating when we looked at how many letters does it take to get a deal. So we did a 1 page neutral versus 2 page neutral versus 1 page range, 2 page range, 1 page blind, 2 page blind. And so this year, 2025, as we record this in late June, we eliminated it down to our top 3 performers. So we had a 2 page blind offer, which beat the 1 page blind offer. We had a 2 page neutral, a 1 page neutral, and then a 1 page ranged. So those are the top performers. We had different variations even within that. And for this year, the blind offers have creamed all of those other ones. Like literally, I could pull up the numbers, but it was something like blind was like 5,000 letters per deal, which this is stuff that we're trying to buy for 30,000, sell for 60, not the desert squares, if you will,
Yes.
cheaper
Okay.
land that we did before. Whereas the neutrals were like 15,000 per acquired property,
Oh my
and
gosh, you're
then
crazy.
the
Because
ranged
I'm,
was
I'm looking
like
forward to talking to you about
10,000.
this because when we look at our numbers and numbers of my students, we're at maybe 1,000 neutral letters to a deal. And I have one student right now. His name is Grant. He's averaging one deal out of every 600 letters that he sends. And it's my philosophy has been different because I came from houses and I've always just thought, you know what, I want as many leads as possible. And so and why is because I want as many phone numbers as possible so I can make as many offers as possible so I can follow up with as many. And if you set it up with systems, right? So instead of spending the hours that I got frustrated with of analyzing properties to come up with a subdivision of a subdivision of a subdivision, right? And then pricing that and then doing a blind offers, which takes forever. I would rather just I find the top zip codes where the most activity is, where most of the buyers are buying recently. Just give me everybody who owns land there for over 10 years that doesn't live in that zip code and just mail them all a cheap, ugly postcard. Get all the calls come into voicemail. So I say on the postcard, text or call this 24-hour recorded voicemail. And the voicemail explains what it is we're doing. We're land investors. We buy land. We can close as quickly as in 30 days, blah, blah, blah. And then each letter has a reference ID so we can look it up quickly, right? And then the system texts them. So I have found that works better. But I've never tried blind offer. Sometimes I'll even in my voicemail I'll say, "Hey, are you tired of fake offers?" Which is funny because you hear that sometimes from sellers, right? They get frustrated with these. And when I can actually now comp the properties as they come in, I can throw them away. I throw 35% of them away because it's 100% wetland or there's no road access. Or I might still make an offer, but a ridiculous offer like $500 or $1,000 because I know I could sell it to a neighbor. I know we've sold lots of landlocked properties. But anyway, I'm looking forward. You guys got to come to this Land Unconference so you can see what David and others are doing and how they are doing this because obviously it's working for you, David. You did 250 deals last year through direct mail, and maybe your numbers. I get it because your numbers are higher because you're chasing the deals you can buy that are worth 60 that you can buy for 30, right?
Right, right, or
Right.
higher. We have
Yeah.
one that we got from mail that we're going to be buying for 100, selling for 200. Right. So
Oh yeah.
generally, the more expensive the property, the higher the mail quantity is going to be. The cheaper the property,
Yeah,
the
exactly.
less mail it's going to take to get it. Right. So if I was targeting $10,000 properties, I would bet you our mail
Yeah.
yield would probably be like 600 letters or
Yeah.
800 letters or something like that, because there's not as much competition in those kinds versus, hey,
Yeah.
I have a realtor friend or whatever that we're gonna be talking to someone with. Which I will say too, Joe, I have noticed in cheaper properties, our neutral letters were performing well. When
Okay.
I look at data from 2024, 2025, we haven't mailed any cheaper properties,
Okay.
only
Interesting.
medium sized stuff. So I can't speak to cheaper properties for this year in terms of actual stats to go off of.
Yeah.
As I look at the industry today, I think particularly in the medium sized stuff, you have some people that are really anchored to certain prices. I will say too that everyone's land business is a reflection of who they are, right? Like you probably have an amazing background in sales and sales training and stuff like that. Me, I've always been much more of a numbers nerd by nature. I'm sure you're great with numbers too, and I can do sales too, but it's just not my strong
Yeah.
suit. So the blind offers for me speaks to really who I am as a person in the way that I lead my team, where I'm probably not as great at closing as you are. You may
Which
not
is
be as great
fascinating.
with the analysis and spreadsheets as I am, right? That's
Yeah,
just
that's really good.
naturally my
Because
bent.
some people, again, don't like talking to sellers. I don't enjoy it. But whatever you do, find what's you and do what's you. Do what you're good at. I've always said, outsource your weaknesses. Don't fix them. Don't try to fix your weaknesses. Outsource them. So you're sending out blind offers to remove the tire kickers, to just remove somebody that's going to just waste your time and just try to see what you could offer only to reject it. Now
Yeah.
you're only talking to people who at least are in the right ballpark who want something similar to what you're going to offer them. Okay, so let me ask you when it comes to pricing offers now, do you do that on your own? Have you ever just used the data from priced, for example? Or are you going down into the subdivision, analyzing it yourself?
As part of my staff as we have it today, I hired one Cameron, who's here with me, my right hand guy in the office. I hired him about a year ago, and I've spent a lot of time with him, training him in, looking over thousands of deals together, and having him price it, me price it, stuff like that. So now he oversees my team. So I have a team of VAs that do it. Now I have three, and all three of them are working at least 25, 30 hours a week in pricing blind offers. So there is an investment into the team for doing the blind stuff because I'm not doing it, right? Like I've developed the process, I trained it, and then Cameron's continued to hone it and improve it, and we look over the results together. But literally just in the last 2 weeks, I said, okay, anything over 100 grand needs my stamp of approval of it. Anything under 100 grand, go ahead and go for it. And if I take a look at it later, before we actually close, I can still kill the deal, if I don't feel it's a good price or not. So
Now, before you listeners freak out of like, oh my gosh, I'm not going to be able to hire other people to do all of this stuff. Relax, because I'm going to ask David questions about if somebody were just starting and they wanted to get to 10 grand a month, what do you recommend that they do? Because you don't have to hire people to price your offers for you. That's where you get eventually after a few years of doing this, right? Boy, I got a lot of questions I want to ask you about your favorite tools that you like to use, the favorite data providers and software and stuff like that. But let's go back to what I was just saying. Like, there's a beginner listening to this who's just getting into land. They're really interested in it because they're tired of the frustration of the competition from houses. And by the way, I say this to everybody too. If you are complaining about the competition in land, all right, go try to do houses for just a few minutes and you'll be like, "Oh my gosh, this is so much easier and better." Talking to sellers is better and easier. Like getting your offers accepted at 50 cents on the dollar is easier with land than it is with houses. And yes, it may be more competitive, quote unquote, maybe in land now than it was 5 years ago. But still, when you compare it to houses, land beats it by far. And by the way, too, people complain about land being competitive, more competitive than it maybe used to be 5 years ago. But I don't know if I agree with that. In some markets it is, but in some markets, we're still getting huge response rates on our direct mail. And a lot of people come into this market, into this land investing thing, and then leave. They quit. A
yep,
lot of people are
yep.
quitting.
Well, it's fascinating too, Joe. We've been through the multiple cycles of the Land Unconference, and you have the cream that rises to the top. So the 20% ends up making it. I don't care what business you're talking
Yeah.
about, whether it's land, wholesaling, my financial planning days when I first started out with Edward Jones, 20% sticks, 80% doesn't. So the 20% that sticks, what's special about them? I would say, in the land business, they might have a numbers bent or a sales bent. They usually have one of those two things. Usually they've been through some other kind of small business, right?
Yeah.
Whether house wholesaling or
Yeah.
running a software company or you name it, financial planners, accountants. I've seen people from so many different walks of life that succeed in this business and stick. And then, so anyone can do it. And with so many different ways, we're just talking about neutral versus blind. Well, there's cold calling now today. If you're awesome at closing people, cold calling gets you a crap load of leads. And you might have a better experience than I did. There's PPC, there's PPL, people that are you can pay per lead, nowadays. I mean, there's so many ways that didn't exist 7 years ago, 8 years ago when I started in this business of marketing channels that beyond just mail. Everyone did mail 8 years ago. Nobody was doing cold calling. Nobody was doing PPC. That stuff was totally not done at all. So totally
Yeah.
a lot of opportunity for a beginner.
Oh my gosh, so much opportunity. And guess what? Just like with houses, though, you think houses is competitive, and it is, but there will always be tired landlords, right? There will always be somebody that bought that rental property a year ago that has been through their third tenant already in 1 or 2 years and is like, forget it, fine, I'm done, I'm out. I got to get rid of this thing. And that'll be the same with land. So there always will be new motivated sellers coming into the picture who will get your letter at just the right time. Will be like, yes, fine. I remember when I was first getting started doing houses, I was getting frustrated with all of the competition out there. And I remember some seller called me and he says, yeah, I'm ready to sell. I keep on seeing your billboards, signs all over the place. And I got, this is your 20th letter that I've gotten. So yeah, I just want to get rid of it. He thought
Mm.
I was the Homevestors guys, right? Doing those billboards. He thought it
Ah,
was all of my letters that he had gotten over the last year, when really I just sent him one postcard or letter or whatever it was.
yeah,
So
yeah.
sometimes, even in the competitive areas, you can be that fly riding on the elephant's back into some of these markets. Okay, so David, let's talk to the guy or gal right now that wants to get to 10 grand a month, 5 grand a month in recurring revenue, which I love. That's one of the things I like about the Land Geek. Mark Podolsky's got a great book. By the way, all of you should get his book. It's called Dirt Rich. Just go to Amazon and buy it. It's a great book. And I've learned a lot from Mark over the years. I love the emphasis on passive income from notes, right? Yes, you might have a higher default rate with land than you do with houses, but it's really easy to find new buyers to replace the old ones, right? What would you recommend to somebody getting started who wants to get to that 5 or 10 grand a month in recurring revenue? Let's start with, what kind of areas of the country would you look at?
Yeah, for sure,
Desert
Joe.
squares in Arizona, the little
Well,
quarter acre parcels in Florida. You know what I mean?
yeah, well, I think there are certain areas I would tell people it is so uber competitive. I just wouldn't go there. Like for example, Lee County,
Yes.
Lehigh Acres. People that are buying above wholesale. And I don't know who the heck they're selling to, but they must have relationships with builders. Maybe that's you that's listening to this. I don't know. But in terms of a traditional land investment model, a place like that last time I tried to mail there, which I think was last year, because I said, okay, let me just give it another try just to see. It's been a couple of years. Let me give it a try. We skunked. We got nothing out of 5,000 letters, which we're trying to buy for 9,000, sell for 18,000, or buy for 10, sell for 20. Like, we got nothing after 5,000. So like, okay, clearly it isn't the time yet to
Yeah.
to go back to that particular county. I would say places that are just uber competitive like that.
That doesn't mean all of Florida. You're just
No,
talking about
no,
like
just
the
that
most
particular
competitive
county with
counties.
quarter acre to half acre type lots.
Yeah,
You
wow.
might be able to
Yeah.
have great success in Lee County with 1 acre or 2 acre lots or something like that. I haven't done those in a really, really long time, so I can't tell you about that. But absolutely, Florida's a great place. We've bought plenty of land in Florida and made good money on it this year. I would say there are some areas that land investors have pretty heavily trafficked, like Costilla County, Colorado, as an example. I have not
Yeah.
mailed there in a very long time, so I can't tell you how competitive it is or not, but a lot of us started there. I still sell properties there, but I don't mail to acquire properties in Costilla County, for example. But
Yeah.
all that being said, I think there's so many areas. Like here, I'm in Minnesota, right? I mean, how many land investors mail Minnesota? Not many, right? So you could target a smaller acreage, like let's say 1 to 2 acres or 1 to 3 acres or something like that, here all across Minnesota, and your competition is going to be far, far less than in some of the places I was just talking about,
Yeah.
or Indiana or New York or a lot of different places. Now, there are some places that are attorney closed states, so you have to be
Yeah.
careful of those. And but places like New Mexico, Arizona, Colorado, Oregon, that's how I got started in my career, was all of those kinds of places. And today we still acquire land in many of those places. There are a few things that you have to be aware of, like Arizona. There is this rule that once you have bought more than five in the unit of a subdivision, you have to get a property report done, which costs about $10,000 to get this property report done. And actually last year I got fined by the state of Arizona for not filing that property report in like 6 units of subdivisions across the state. So
Wow.
you do have to be careful in certain places. But hey, if you're just getting started, it doesn't really matter. I doubt you're going to buy enough to acquire more than 5 or 6 in the unit of a subdivision. But the more specialized you can be, the better. If I was recommending someone just starting out, do your research, take a look at what's out there, see what's in your budget, and then find areas. You could go on lands.com and see where's a lot of land available that people are trying to sell. And
Owner
then,
financing. I was just doing that right now while you were talking. I went to land.com and I looked in Florida, and you can do a search for owner financing as one of the options and go see where everybody is doing owner financing right now, right?
absolutely, absolutely. And then if you get, which I'm sure, if you've talked to other people that have talked about going through the Lanky type program, hey, find subdivisions, right? In a lot of cases, what's beautiful for blind offer pricing for someone that's just starting out, in many areas, not all, but in many areas, if you find subdivisions, you can price your blind offer letters practically all the same, depending on what it's like. If you end up having water, mountains, trees versus no trees, stuff like that, that gets more complicated. But part of the reason people love Costilla County, Colorado is because they all freaking look the same. So you can price them all very, very easily. Or like people liked Lee County, Florida, or Charlotte County, Florida. All these properties are the same size. It's super easy to price a blind offer for, 10,000 letters. And then you could be done with that for a while. So that's a much easier way to go about it. And that's how I started in this
Yeah.
business, was really digging into subdivisions, studying subdivisions, seeing what's working, not working, adjust, do more of what's working, less of what's not, that kind of thing.
I'm looking here and there's a ton of properties on land.com listed for owner financing. In fact, one of the ladies I interviewed a few months ago from the Land Geek community, you might know her, Dr. Quinn, an Asian lady and her husband from a company, I forget his name. Very nice couple. She's also a pharmacist. So it's like Dr. Quinn, medicine woman, whatever. I interviewed them recently and they're doing a ton of owner financing deals. I didn't dive too deep in their numbers, but man, you can go in and see somebody like that and see where they are doing deals and piggyback on some of that success. Okay, so let me ask you an obvious question for me at least, but maybe not for others. Can you do owner financing deals in Minnesota or Indiana and places like that? Even though it may
Yeah,
not be like a real hot spot that you see in land.com.
we do it all the time. It's I prefer cash now whenever possible, but I sure as heck aren't going to turn down owner financing, and that's why I want to keep about 400 to 500 notes. Keep in that range because I do
Okay.
love the income that comes from that. And so we have some higher quality notes now. Stuff that's paying us $700, $800 a month each. Kind of notes that are coming through now. So you don't need as many as when you have $100 a month or $200 a month on average coming in, which is normally where we've sat. $200 a month was our very typical monthly payment for what folks have been doing. But yeah, I think for the most part, which I am not a legal expert on every single state, but the vast majority, land contracts are totally fine and you can do owner financing. I've never ran into a problem not being able to do owner financing in the 8 years I've been doing it. And I've now
Yeah.
probably done half of the states in the union on owner financing.
Yeah.
So
Just go to land.com, do some research to see what states there's a lot of owner financing in. You'll find Texas has a lot, Arizona has a lot, Florida has a lot. I'm just looking here. It's pretty easy to search for that. California, let's just look at California.
it
I've
should
done
be
a
pretty
lot
common.
of deals in California, and for some reason, I stopped really targeting California that much, but there's a lot of owner financing land in California. Okay, so somebody wants to get to 10 grand a month. Their capital is limited. They're going to need to either borrow money from a private investor or something like that, right? But so to get to that 10 grand a month, and let's say you're averaging you're doing the smaller deals, you're getting $200, $300 a month. What's next? Like you got some good counties, you got 5 or 6 counties that you're looking at. They're not the number 1, 2, or 3 most activities, but they're kind of like in that, they're below that. Maybe they're maybe 5 through 10 or 5 through 15, right? And so now what? What do you recommend?
Yeah, so if you have your list of counties, you're just getting started in this business, I think I would really look to, as you think about having money, what does that look like? How do you do it? What I have done in my particular case, of course, any equity you have, right, is always good, right? So if you have a W-2 job or you own another business or whatever, hey, the more money you can plow into it, fantastic. If you don't have that kind of capital, we could look at, hey, do I have a 401k? Can I borrow from the 401k? Would not use that for operations at all,
No.
only for property acquisition. Do not borrow from your 401k if you're using it to send mailers. Bad idea, because the mailer
Yeah.
could skunk on you. All
Yeah.
right. But, or to pay employees or anything like that. I'm
And
talking
don't
about
use your 401k for coaching and mentoring either.
no, 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 no. I'm talking about something that gives you a direct ROI where you've gotten to the finish line,
Yeah.
you have, money. Borrowing from the 401k can be great for you because you're paying yourself back with interest. And I wouldn't also recommend anyone to do that until you've done 2 or 3 or 4 or 5 deals where you've gone full cycle and proven it to yourself that you can do it. All right. But you can do it early on. I did, and it worked out great. I also got a credit line from the bank. So with me having my existing business, oh, I got a credit line from the bank. They started me out at 15,000 bucks. Now today, Wells Fargo gives me a $100,000 credit line. Amex has given me a credit line of another 150 grand. So those two, I have $250,000 at my disposal to borrow. I didn't have that to start out with, right? But you could get 10 or 15 grand, which again, I would say early on, you can do it, but don't do it for your first or second or third deal. Prove it to yourself to go full cycle and get the money done. But if you think about it this way, like my line at Wells Fargo right now, I borrow at about 10%, right? So if I'm borrowing at 10, and let's say that after all my costs and everything, my ROI is 40 to 50 cents on the dollar. I'm not talking about the raw gross profit number. I'm talking actually after all your expenses and everything said and done, you're making 40 to 50% because you are going to be the one doing everything. You haven't hired everybody yet. So your ROI should be very, very high because you have almost no labor costs. All right. So you're making 40 to 50% versus paying the bank 10. I mean, that makes sense all day, every day, right? I mean, heck, if you added a 25, that still makes sense all day, every day. But you have to know your numbers and know, what you can afford and not afford. If you suck at mailing and your operational expenses are crazy high, well, you probably shouldn't borrow money to do it yet, right? But outside of that, the other thing I started doing was talking to friends and family, right? Saying, hey, I'm looking at doing this deal. Back when I started in the business back 8 years ago, 50-50 was a very typical equity split that you would do with someone. Today, I think 60-40, 70-30 is far more common because operational costs are a little bit higher for us as operators. So talking to friends and family and say, hey, if you give me $5,000, again, if you've done a few deals, hey, here's some of my track record of what I've been able to do. Now, as you talk to your parents or aunt, uncle, niece, nephew, brother, sister, whoever, that is interested in it. And guess what? If you do well for them, they'll keep wanting more and more and more and more. And that's how I've been able to build up my business, is doing a combination of those two things. Much cheaper capital with debt stuff, but not crazy expensive. Like Amex now is like 6% is my interest rate on the Amex. So all I have to do is beat 6% to have that make sense. Versus the equity split, I'm currently paying more 70-30 on that kind of thing. And then I have hard money loans, which I take on and I also give out to more expensive properties, not the cheap stuff, but where you're buying for 30, selling for 60, buying for 50, selling for 100, those kinds of things. Not buy for 1,000, sell for 3,000, but much more margin and those kinds of things.
Well, one of the things I found out too, and I always do your due diligence with anybody that you do business with, but I've noticed in a lot of different Facebook groups, land investing Facebook groups, there are people there willing to lend money on deals. And so always do your due diligence be always careful when you're JVing with anybody, right? But for your first couple deals, find somebody maybe that's already doing deals that you can JV with them on that deal maybe, and do a 50-50 split. Again, just to get some deals under your belt. Would you agree? Get some deals under your belt. Then you can go to your private investors and friends and say, hey, you want to partner with me on this next deal? Here's 5 that I've done recently. And here are some numbers on this one. This is what I plan to do. Okay, so you get some capital lined up through private investors maybe, or with some funding companies or other people in Facebook groups or communities that you're in, like dirt flippers. All you guys see it right here. Okay, so then now what? You got some counties, maybe you got some zip codes. You like to do blind offers, so maybe break down how do you get the list? What tool do you like to use to get lists, and then how do you do the pricing?
We used to use Data Tree, but now we're just exclusively over the last a little bit less than a year using Land Portal, just like you were mentioning earlier. So that's our favorite tool of the day. Land Insights thing uses Data Tree, by the way. So if anyone subscribes to Land Insight stuff, it's Data Tree data that they're using. I'm not so sure where Land Portal is getting their stuff from, but we compared side by side. There's also Land Vision that a lot of people have used over the years to get unlimited data, pay a kind of a flat fee and you get unlimited data, but it doesn't have all the cool AI stuff that you get through Land Portal or Land Insights today. So, in our case, we're sending out, we're probably downloading something like 80,000 records a month is what we're downloading.
You're downloading 80,000 records a month
in order to mail out 50,000, because we still do some scrubbing in there.
50,000. Okay.
Because we're trying to eliminate stuff below a certain price, and then we're trying to eliminate stuff over a certain price. And until we do our pricing, we don't know where that's going to be. So we have to download more data than what we need in order for us
And
to
are
send
you,
out.
how are you doing that? Are you going off of county assessed values or taxes owed or something like that?
No, no. So what we do, we don't use zip code data, but basically in our case where we're trying to target buying for 30, selling for 60,000, those kinds of things, or buy for 50, sell for 100. We end up it depends on the county, right? Because we have to, in order to get 80,000 records every month for 4 out of 6 months, that takes a lot of counties and stuff to do that. So some counties might only have 1,000 records. Other counties might have 10,000. Some might have 5,000. So the more data we have, the more honed in we can get on pricing, right? So
Yeah.
like a 1,000 record county, there's not a lot to chop up there. We might divide it in two. We might just do average county pricing just to get it done. Whereas if we have 5,000 records, well, now we can chop up the county into 4 or 5 different parts, right? And we can get more honed in on pricing. So the more data we have, the more specific we can be. Certain areas, there's mountains and trees, there's lakes, there's like here in Minnesota, there's lakes everywhere, right? So there's a
Yeah.
lot of lakefront stuff. It makes pricing a lot more trying. And in some cases, when you pull the data, you might be able to see in land use or some sort of zoning, oh, this is waterfront property. So in some counties' case, you can make an adjustment for that as you do pricing. Other counties don't tell you jack squat, and you don't know. The greatest thing about Land Portal is, hey, they have road frontage, they have various filters you can put on to really hone in and really sniper stuff if you want to. We're currently not particularly going after subdivides. We have looked at different plays on that from mail that comes back to us, but we
Okay.
haven't specifically tried to like sniper subdivisions, doing subdivides our own selves. So that's basically our process of, hey, we get all this data, figure out how we want to play out. The more data we have, the better we can divide it up and be more specific on pricing. The less data we have, the less time we're going to spend on it. And we just give it a shot, and see what happens, which means sometimes we have people really happy with the offer, but then we can't do what the offer said when we really start to dig into the details. Because all blind offers is a good guess, right? We could be really low, we could be really high, we can be spot on. So sometimes that leads to more profit potential. Other times we get a lot of pissed off people because, we can't do what the
Yeah.
price says. And it's the goal of the lead manager and the acquisition manager to talk them down into something that helps us acquire the property at a price that makes sense for the margins that we need to have as a business. So,
Okay. So somebody's going to ask this. What do you do when you offered 50 grand and you should have offered 25 grand and you're way over, right? How does that conversation go with that seller when they
well,
first call?
definitely it's a challenge, right? Because people are now anchored to what was said on that paper. And so the question is, how motivated are they? What are they motivated by? How can you connect with them as a human, right, to relate to it? To be honest, an awful lot of the time it's not going to work, right? I would say probably 60% of the time, 70% of the time, someone's responding, they were excited. We don't get a deal out of it at that time.
Yeah.
30% of the time we do. And it's just about connecting and being human and getting to know someone and gaining their trust. And that they are motivated enough that they will then take the offer, right? In a lot of cases, it's follow up. So even though we couldn't get it to an offer today, hey, we're probably close to $200 for every mailing lead right now, whether they gave us the middle finger or they
Yeah.
accepted the offer, or everyone in between, right? So after 5 of those leads, I've now paid $1,000 to get in front of these people, right? So it's like, we're going to follow up with these people because it's so stinking expensive to get in touch with them in the first place. So when we've had deals where we've done follow up, and some automated sequences and manual follow ups and stuff like that, and we've gotten deals 6 months, a year, 2 years
Yeah.
later, where we're not having to send the mail, but because we're texting, emailing, calling, continuing to develop a relationship and look with them, we win the long game, right? Because there's
Yeah.
going to be plenty of other land investors that come and go, but I'm not intending on going anywhere, and so we're going to keep after them and keep dripping on them and keep after it.
Yeah. I love that. And again, those numbers are intimidating for some people, I know. because you're like, oh my gosh, that's a lot of money. I can't do that. That's not where you start. Okay.
No.
If you're just looking to do your first few deals, if you're just looking to get to 10 grand a month, you're not going to start there. Okay. So you get a list, you download the list. Can you give a quick tutorial on how to price property? You get 5,000 records, you divide it up into quarters, into fourths, maybe. What are you doing to get pricing?
We don't we do it all in house. And before I even had VAs doing it for me, I was doing all of the pricing, right? So just starting out, Dave was doing the pricing. That was something that was a good skill set for me, being a numbers analytical financial guy, right? That's up my alley in terms of what I can do. And so, and I enjoyed it, and I still enjoy it to a degree. I'm just pulled in 1,000 different directions now. But anyhow, what I would do if someone's just starting out is do what I talked about of subdivisions. If you're now graduating up, where you've divided it. Some people do zip codes, right? Zip code pricing you were talking about earlier, Joe. We don't
Yeah.
usually do zip codes. We tend to look at what's the disparity of pricing in an area. So certainly when you have like a city, right? It's a major city that's in that, or even a minor city that might have 100,000 people in it or something like that. You'll have more expensive land around that, right? So that might be one region of around the city. And then you have the east side of the county that has a lot of water on it. That's going to be priced differently than the west side of the county that has a lot of mountains on it, right? So we price off of each of those things as we look at dividing up an area, because we know around the city is going to be the most expensive stuff, right?
Okay, so
So
let me ask you something then. If you're wrong when you send an offer and they call you and you're wrong 60, 70% of the time. I think that's what you said. Maybe I misunderstood. 30% of the time you get it right.
when we are wrong on an offer, we don't get the deal
Okay,
60 to
okay.
70% of the time. I would say, probably since I have Cameron and the team really focused on it, I feel like probably 60, 65% of the time, we're really solid on the offer, and probably 35, 40% of the time we're not. So better than
Okay.
a 50-50,
Yeah.
but it's surely not 80% or 90%, because with the volume of mail that we're doing, it's an issue. But when it's just you, and it's just you starting out, if you're an analytical like me and you're not sending out 50,000 offer letters a month, and you're sending out 1,000, it's a lot easier to focus on a
Yeah.
1,000 record set and really price it very well.
Yeah.
Look at Zillow, look at Lands, look at some of the county records, as you're clicking around. Like we use map right now called Land ID. Sometimes there's stuff that doesn't show up on Zillow. Just by clicking around a neighborhood, you can kind of find out what stuff has bought or sold for. So I would spend a lot of time on that if I'm someone doing blind offers, just to look on different sites. You could go to Scott Todd's website, Landmodo. You could go to Landflip. Look at multiple sources to pull data, and you can kind of get an idea of what's happening out there. And then if you find someone like myself in my company that's buying and selling a lot of land in an area, go study their website, right? See what other stuff they have listed, because more than likely they probably have a couple of years of history out there that you could go and poke around on and see what they're doing and study.
And they probably bought it at 50 cents, 50% of what they're selling it for. Why not just use some of these pricing software tools like Priced, Prycd? And I'm sure there's others, but I've used Priced in the past. And you know what? I know it's not going to get me exactly right. I could probably do better on my own, but just from a time standpoint, just forget. I'll just use Priced 40% of priced value. You know what I mean? On a blind offer. Now, why don't you use those kinds of tools?
I have in the past. So I have used Priced, which I think there's some great things about it. But what I found was that there were a lot of duplicate records that they were using, and there were a lot of outliers. Now it's been a few years, so maybe they've improved it. I'm sure they probably have improved it since the last time I used it a few years ago. But at the time, there were some big outliers that was like, as we did the pricing versus they did the pricing, there was a huge difference between them. For someone just getting started out, maybe you're not very numbers oriented, fine. You could go for it. I mean, I would still encourage you, even if you use Priced, to do spot checks.
Yeah.
Start spot checking through the list to see, hey, if I'm going to buy this property, what would I buy it at based on what they offer? Does this make sense or not? And if you're finding the majority of the times that it does make sense, then use it. Because I think in certain counties, for example, certain areas, it can work fabulously well. Other ones, not so much. So when you have a lot of pricing, like in a subdivision we were just talking about, right, where hey, everything's priced the same, you don't really need it. It's not necessary at all. It's very easy to do. Whereas if you have something with a lot more difficult geography and things going on, that might save you a lot of time, using something like priced. But even there, you have to decide, what are you going to weight like on priced? Are you going to do 50-50 sales to availables? Are you going to do 60-40, 70-30, one way or the other? So there's still decisions to be made, even
Yeah.
with a tool like priced, that you as the operator have to decide what are you going to do with it. And that might be a good decision or a bad decision depending upon what you're putting in there and what you're looking for.
Well, sometimes, you're looking at an area and you see active listings and sold listings, especially in Florida. Sold listings are way down here and active listings are way up here if you're getting an average median price per acre. But a lot of these sold listings are investors like you and me. So one of the things I've always wrestled with, and I'm trying to price offers in advance, is, well, what do I use? Am I using investor comps because they're buying it where I want to buy it at? Or should I use retail comps where that's where I want to sell it at? Do you ever run across that problem?
Well, I find, Joe, right now today, as we're talking in June of 2025, that availables are generally listed for a much higher price per acre than solds. And I'm
Yeah.
talking solds on a retail basis. Like
Okay.
right this second, there's probably a 10 to 20 to 30% haircut on the
Yep.
difference between availables versus solds. At least there's different counties, different areas. I'm giving a generality here, not like super
Yeah.
specific to any one thing, right? But as I look across the country, all of the stuff that we're doing, and even our own properties, and having to reprice stuff and trying to get stuff sold, I'm finding 10 to 20 to 30% haircut is pretty typical. I like solds right now over availables but you have to check it out because you're right. There could be other investors that are pulling things down. If you look at Zillow or Redfin or places like that, you hopefully can find a parcel number so you can look at that property to see, hey, does this make sense? If you look at on Land ID, you might be able to see who the buyer was, right? So you could tell who the
Yeah.
person was or not, assuming that you can get the parcel number to work from one place to the other, which I think at the end of the day, everything I'm saying is the ideal world, right? But in the real world, we have to make decisions and make them quickly. So sometimes I would encourage everybody, you can spend so much time in these analytics, you can get paralyzed, right? Paralysis by analysis.
Yes.
And so sooner or later, you got to take action. And I think that that's probably what's helped me is I take constant, massive action in
Massive
this business.
imperfect action because you're going to
Absolutely.
make mistakes and that's all right. And that's why I'd
Absolutely.
say, man, yeah, if you're just getting started, use priced. If you want to do blind offers, bam, go with priced. Or I knew a guy that I've had on my podcast a couple, 3 times. He just goes straight to land. It goes to list source and he downloads a whole list of a county and he breaks it up by subdivision if there is a subdivision, and then just gets the pricing right from a spreadsheet, figures it out by subdivision price per acre, and makes his offers at 40% of that or whatever. It's just a numbers game and you're going to make mistakes, but you're okay with that. Right. Okay. We got to move on, David, because this has been good, really good so far. And we're approaching an hour and I'm actually over. Do you have time for just a couple more questions?
Yeah, go for it, Joe. Absolutely.
What do you have you ever tried making offers where you give the sellers a couple options? Here's a cash price and here's an owner financing price, maybe where I can buy it from cash with cash at maybe 40 cents on the dollar. And if you're willing to finance it, I'll pay you 60 cents on the dollar, 70 cents on the dollar. Have you ever tried doing that?
We don't specifically haven't used owner financing on the buy side, but what we do is with our acquisition team. So our pricing team, once someone responds back to a marketing and say, hey, let's check this property out, see what's up. Lead manager talks to them. Lead manager sends it to pricing team, says, hey, I need to know what we can be able to do for this property. So we have 3 different prices that we call offer 1, offer 2, and offer 3. In our case, that we're targeting more medium sized type properties, buy for 30, buy for 20, buy for 50, and so on. We have basically let's kind of 40 cents on the dollar approximately. We have 50 cents on the dollar for offer 2, and then we have like a 60 to 70% offer, which is a 120-day double close kind of a price. So if our preference is always to do number 1 or number 2, right? Because that way we own it, we control it, we can take it over. But if we can't get those, hey, let's see if we can squeeze some more profit out of this by trying to do a double close on it.
Now,
So
when you say double close, you mean you'll buy it if and when you find another buyer to wholesale it to.
exactly, exactly.
Interesting. And you're asking for 6 months for that.
It depends, right? That's a
Okay.
negotiating point. Our minimum is 120 days, double
Okay.
close. So that's our minimum. But we do try for up to 6 months. It's like, okay, you like the price. It's like, well, how long are you willing to wait, right? And see what you can get out of them. Because obviously, the longer we have, the better chance we have to sell the thing.
Yeah.
Versus,
Will you do like a novation in that instance, or will you just have it under contract with 6 months to close?
we won't do innovation. Yeah, our goal is to close it ourselves. So we want to come to the
So
table.
even on the higher priced option. Okay. What is some of your favorite software tools that you're using right now?
Talked about Land Portal. Talked about MapRight. I still like to call it.
I know. I
Um,
know.
we have our own
Although
custom.
I've been using Regrid a lot lately.
You liking
Regrid
it?
is super cool because you can just search for by APN number, coordinates. You just put it in the search bar, address, GPS coordinates, APN, and it just bam takes you right there to the property. You don't have to click through a bunch of buttons and create a bunch of maps. Check out
Love it.
Regrid.
We
What are some other tools?
we have our own custom built CRM in Podio, which is
Cool.
probably a whole podcast to itself of the joy and pain of building your own CRM out. We use Rocket Print for the mailing. We
Cool.
use an EOS software called EOS One to help with our leadership meetings and team meetings and rocks and all the kind of good stuff that EOS has, which it's a pretty cheap software. We really like that a lot.
I'm sorry. Look back to Rocket Print. You're using Rocket Print. You're sending bulk rate mail, not first class. Okay.
Yeah, exactly. Yeah,
And have you
it's
tested first class versus bulk rate?
not recently, but I have in the past. And
Okay.
the cost wasn't worth it. It was like 30 cents more per letter for first class. So you're talking about having to get, 50% more ROI on the letters. I used to, but I don't anymore because when I compared the two a few years back, I haven't done it recently. It was the cost per acquisition was so much more expensive with the
Okay.
first class stuff. We used to skip trace a whole bunch of stuff too.
For phones, what do you use for phones?
Open
Dial-in.
phone.
Open
We use
phone.
open phone.
And that's done through Podio, right?
We have to work on that in the integration. So it's currently standalone, but that's one of our rocks actually for Q3 is we want to get the open phone because it does have open API now, which it didn't used to a year ago. So in the last 6 months to a year, they opened up the API. So now we can do it, which is great. I've used Direct Skip for skip tracing, but Land Portal now has that kind of ingrained in it. The Gmail
If,
suite is great, just in
yeah.
terms of
If you were not using Podio for CRM, what do you think you would be using?
that's a good question. I think there's a lot of things out there. Don't you have a CRM, if I remember right? That's right. Freedom
Okay.
Soft.
So I'm holding up my Freedom Soft shirt. It's a custom signature edition, I call it, of Freedom Soft, where I've kind of customized it. There is no perfect CRM out there. I wish there was. I would create it if I could. And I tried. I was the guy that actually kind of introduced Podio to the real estate world. I had a student from Lebanon, the country of Lebanon, that was doing house deals in the United States. And we were trying to figure out a way we could like manage all these deals we were doing together. And he said, we should check out Podio. And I said, no, I don't want to try new software. He said, oh, don't check it out. And so this is at least 12 years ago, maybe 13 years ago. So I showed it. I loved it, fell in love with it because you could kind of design and build your own CRM. I showed it to a couple big gurus in the real estate space. And then it just kind of exploded and took off. And then I got the domain podiojoe.com.
Oh,
And
really?
I even got joepodio.com. I wanted to be the Podio guy. And I created this service that set up and installed Podio in people's workspaces and quickly realized this is a nightmare. I tried doing it's a long story. And I got to a point where I said, you show me an expert in Podio and I'll show you a broke wholesaler because you could spend so much time digging into the weeds and you have all these connections and links to each other. And then your chain is only as strong as the weakest link. And if one of the links is broken, you may not know about it for like 3 to 4 months. Well, 3 or 4 weeks. And then what? So I just gave up on the perfect CRM. That's not why I settled on FreedomSoft, but I settled on FreedomSoft because it's kind of an all-in-one thing. You get the phone numbers, you get the direct mail, you get the lists, and it manages everything in there for you. And I could send one-off offers. I can do the automated follow-up with texting, with emails, whatever. So, but I'm just curious, a lot of people use Pebble, which is a great
Yep.
CRM. A lot of
Yep.
people use Asana, Trello. I know a guy that does almost 100 deals a year using Evernote as his CRM. Crazy.
Good
So,
for him. I think Seth has a new software that he and Mike Balcom are doing too. So, I mean,
yeah,
I'd probably check out yours and Mike's and Seth's and Pebble, if I was just starting out. But I think reality is when you're just getting going, right?
yeah,
Google Sheets is your best friend,
yeah,
just as you're tracking your
yeah,
first, few. If you're sending out 500 mailers, 1,000 mailers. Google Sheets works great. You don't need to spend $100 a month, $200 a month, whatever it is, on stuff. Like in my case, we probably spend $250 a month because we have all these users. Even though it's custom built, we still have to spend a lot of money for all of the users that we have and all of the phone numbers and stuff like that. So, it definitely does get more expensive. And, we just started out with Google Voice and Google Sheets, and that worked great to get the business going. So you don't need to have all this
yeah,
wonderful software. Now, after you do 5 deals, right, and you start sending out more mail, now you need a CRM to help you out. And this is where Freedom Soft can come in and help you out, or any of these other guys that have software. So as you do more and more volume, you need to get more and better organized, and that's absolutely where CRM should come in.
Okay, cool. Any other favorite tools you want to mention real quick?
We've used Drip for a long time as kind of a email CRM thing, which frankly we could fold it all into Podio. I just haven't done the brain damage enough to go and reset
Yeah,
stuff up in it. I mean, the vital ones at the end of the day, right? You got to have a phone system of some sort, whether it's Google Voice starting out, a CRM as you get bigger, and a data provider and something you can look things up like a map, right? I think if you have those tools, you're good. All this other stuff, is just additive on top of that. Teranotes, formerly Your Land Loans, is another software that we use for note management.
oh, that's a good question. I was going to ask you, what are you using to manage your notes?
So we have old ones, which are on Simple Money, and then
Yeah,
we have new ones, which are on Teranotes, which is part of the problem of when you've been around a while, you start kind of Frankensteining the thing, because the pain of switching from one thing to another, like to have to reset up 300 contracts from Simple Money to have all 500 of them all in Teranotes is just not brain damage I want to have at this time. So,
so have you ever tried GeekPay?
yes. GeekPay has really fallen behind Teranotes, I would say, at
Okay,
this time. I think Teranotes is a far, far better product than GeekPay is. I think for a
yeah,
long time, Mark spent a lot of money getting that thing set up. And my impression is, it's like, I don't want to put more money into this thing. And so then JT Olmsted comes and creates Teranotes and does a whole bunch of iterations of it. And it's a far superior product, in
yeah.
my opinion.
Yeah, and we're kind of stuck with GeekPay. Not that it works, right? It does the job, and so I don't want to knock anybody. But if you're just getting started, take a look around and see what else is out there. But one more question. I just realized I wanted to ask you. What are you seeing right now working best for marketing your properties? Where and how are you doing that?
Well, I think it depends, right, on what style of property you're doing. I know people still today that they're doing those medium sized properties and all they do are realtors. Realtors do the work for them. I found for myself in my career, I can never find just one thing to work the way that I want it to. So we use realtors. We use lands.com. We use land flip. We use land century. We do ringless voicemail drops on realtors and neighbors and all of those different kinds of marketing activities to be able to sell property. So basically anything and everything. I just tried cold calling on the sell side rather than cold calling buy side. Tried doing cold calling sell side just to see could we drum something up there. It didn't work out, but I'm always testing and trying different things just to say, okay, can we figure out something else out that other people aren't doing.
Yeah.
I've tried paid Facebook ads. That didn't work out too well for me on the sell side. We do a fair amount of YouTube. I think now we put out 340 videos on YouTube at this
Wow.
point. And so we're probably getting one, maybe two sales a month from YouTube, but that's
Okay.
a lot of time that we've spent. No advertising spent, but just in terms of the number of videos we've created and all that kind of thing has worked out great for us too.
Unfortunately, land.com is so stinking expensive, but a lot of people are using it. I like realtors, and you got to talk to a lot of them to find the good ones, but I recommend that. I have some students right now that are selling a ton of deals on Facebook Marketplace. They're just active on there, and they're going into the Facebook groups and Marketplace. Yeah, so there's a lot of different ways to skin a cat.
So many, which we do
Yeah,
sell a little bit on Facebook, but it's such
yeah,
a small percentage, of what we do. I know friends that do great on flat fee MLS. They say screw realtors, we're just going to list it ourselves, and they do great there. So I mean, there's so
yeah,
many different ways you can do this business, but I think one that gives us the most leverage out of them for us is lands.com. That's our number one sales source for cheaper properties. If you're talking about more expensive ones, now realtors are our best source, or flat fee MLS
yeah,
is the best source for more of the medium sized stuff. But all that other stuff works too. We still sell medium sized stuff through lands.com, right? It
yeah,
gives us one or two or three more of those a month that we can sell on top
yeah,
of the cheaper stuff. So it all works, and it's not one thing that allows us to sell everything. For us, it's doing a whole bunch of different stuff, and because we never know what's going to work, and so you
yeah.
just do a lot of different things.
Well, listen, guys, I didn't even have time to ask David questions on lending money, right? But I want to encourage all of you go find Seth Williams's podcast. It's called RE Tipster, and do a search for David Denniston, Denniston's interview with Seth. And they talk a lot about lending, why he started leaning towards lending now on deals, and how you can too. It's a whole nother business, but it's really one of the great things you guys talked about on that episode was finding where your strengths are, and some people may be good at one thing and you may be not good at that thing, but good at another thing. And so where are you at in that? If you're great with sales and marketing, then you should be on the operations side. If you're better with behind the scenes and raising private capital and crunching the numbers, maybe you need to be raising private capital and starting an equity fund and start lending on other people's deals. A lot of different ways you can make very good money doing all of that. So go check out that podcast that David did recently with Seth on the RE Tipster podcast. Just Google it, RE Tipster, Dave Denniston, and Seth Williams, and you'll find that podcast. Cool. David, how can people reach you? You want to give the website of your company, the Land Unconference.com. It's a place people can go to get information on this conference that I'm going to be at. So how can people get a hold of you?
Yeah, absolutely, Joe. So people are welcome to send me an email if they'd like, dave@genfamland.com. That's DAVE at Golf Echo Nancy Frank Apple Mary land.com. So if you have questions about lending or whatever, I love networking with other land investors. I'm super busy with all the different things I'm doing, but I will make time for you. It may not be in a day, but within a week or two or three, happy to connect and chat and discuss with other land investors. If you want to check out our buy side or sell side, genfamland.com is the buy side, genfamproperties.com is our sell side website. So check it out. Let me reach out anytime, guys.
Hey, thank you so much for your time, David. Appreciate you. And I'll see you in a few weeks.
All right, Joe.
Well,
Thank you so much. Look forward to seeing you.
about 6 weeks, right?
Yeah.
All right. Hey, see you guys. Take care. Have a good one. And listen, if anything we talked about overwhelmed you, just throw that away, right? But focus on keeping it simple. Keep it simple. That's how everybody gets started, right? To do your first deal, just focus on the simple, basic things, right? Do the marketing consistently, even if it's only 100 letters a week, right? Just consistently keep on doing it, and it will happen. Just got to be consistent. All right. That's all I wanted to say. We'll see you guys later. Take care, everybody. Bye bye.